Hey, folks, on today's Rebel's Edge, Trump's tough talk to Tehran as he seeks a real end to conflict in the Middle East and to Iran's nuclear program. Markets reaction muted so far, and solar stocks get socked on news that the tax benefits that industry has enjoyed are going bye-bye. And finally, Verve Pharmaceuticals is absolutely soaring today on news that Eli Lilly has made a $1.3 billion tender offer. All of that plus Pete Najarian sports up ahead on today's Rebel's Edge.
And here we go, Mark. It's great to see you, man. You definitely look a lot different than John Najarian when he's sitting in that same side of things or whatever. But he's in the middle of flying, right? He's coming out there to see you guys out there on the East Coast, so that should be fun.
He is. We got some very big meetings tonight. Big, huge,
really
tremendous.
Really
big, beautiful meetings. I don't have my Trump dialed in this morning. I apologize. But yeah, it's a busy week for the Rebels. We're going to be down in Cardone headquarters Thursday and Friday. We're going to do the Rebels Edge from our favorite news desk in Miami. So looking forward to that. And yeah, we got a lot to cover on a very busy news day, Pete. So let's get at it.
Let's jump into it. I'm going to go right to what you kind of teased in the opening, which is the Israeli-Iran issues, the conflict, everything else. And the amazing thing is, even with some escalation of what's going on over there, the digestion of this market has been unbelievable. And this is another great example of that. We had a strong day yesterday after that very weak Friday that we'd gotten. We had a strong day yesterday. Today looked like it was going to maybe be, weaker by a substantial amount. Well, that substantial amount has been getting chopped away. So here we are, Mark, and I find it really interesting that people are looking past certain things. And you know what? You just have to understand the market and understand that things like this happen. And that's been the market we've been trading for the last probably, call it 2 or 3 months.
Yeah, that's absolutely true. I mean, the VIX just before we went live, just crossing that 20 handle, but otherwise, even a muted reaction from the market's favorite fear gauge, which is something that, of course, we watch very closely. And I think, Pete, as I've said on Newsmax and other outlets, we're anticipating a fairly swift, comparatively speaking, resolution to this situation. And notwithstanding that there was some talk of escalation, at the same time, we heard talk that maybe Tehran has reached out and said, we're tired of getting the poop bombed out of us, so maybe we ought to talk about something. But President Trump, that 5 a.m. press conference he had on Air Force One this morning, talking pretty tough. He doesn't just want a ceasefire. He wants this resolved. Iran cannot have nuclear weapon capability. They cannot continue to flagrantly violate all of the accords, all of the non-proliferation treaties. The world has had it. So I'm hoping that there is not further loss of life on either side, and this is brought to a swift end as markets are pricing in. And of course, the J-Pound nothing burger tomorrow. I mean, I think the CME Fed tool, Pete, what is it, 99.999% that he's not going to do a goddamn thing. So
it's really high.
Really high, super high. But of course, the news will come out from the comments and the press conference and what he says during that. But look, I don't think we're getting any cuts till September.
I don't disagree with you. As a matter of fact, from the fantastic future perspective, I think the interesting things are watching crude once again. It spiked, it pulled back. And today it's spiking again. It hasn't really pulled back much. It's actually been holding on to north of 73, call it 73.50, 73.60, something like that, as far as crude oil is concerned. You mentioned the volatility index. I'll just say this. It's amazing to me that we are only sitting right around 20 over the last couple of sessions, and we've pulled back underneath those levels, even all the way into the upper 18. So it's a market that wants to be able to get into a spot where we are less volatile. Doesn't mean it's going to happen, but that certainly is what it looks like to me right now, because under most circumstances, when we have all the things going on in the world that we've got going on, including the tariffs, which, by the way, July is not that far away, no. I would think that volatility index would be higher than it is right now. It's not, and it's been kind of hovering around 20 for a while now, either north or south of it, but not very far away.
Yeah, totally and completely agree. The only other thing I'll mention, the fantastic futures, we did get the retail sales numbers this morning. They were off 0.6%, 0.9. The street was looking for 6. But when you dig in a little bit at those numbers, you realize if you take out automobiles and building supplies, the two areas that were the biggest of concern, steel, auto, tariff, etc., consumer spending and retail sales were actually not that bad. And I think, Pete, here's the future part of the Fantastic Future segment. I think June's retail sales figures are going to come in strong, especially if the recent consumer sentiment numbers are any indication.
Yep, which, that's always a difficult thing to figure out is are they accurate or not? We've seen a lot of things that are very inaccurate over the last couple of months for sure. All right, let's just jump into these stocks that we're going to talk about. One of them is not just a stock, it's the solar stocks. And to see what's going on there with this Senate budget bill, it's a really big bill. But I got to tell you something. It's absolutely amazing to me how bad these guys are getting hit. And you kind of teased this early on, but the fact that these solar and wind and the credits that people get and by 2028, those are gone. And so I don't know why it's a shock to the markets, but it certainly is because Sunrun was down 40%, Solar Edge was down 42%, Enphase was down 28%, First Solar was getting beat up. All of them are getting beat up to some degree, Mark, and understandably why, I suppose, but I just wonder where were the bulls, the bulls that were in here pushing these things to the upside. I think the one nice thing is, and I'll let you hit it, but we had some huge unusual options activity that were coming in there. And oh, by the way, they weren't buying calls, were they, Mark? They were going for the puts.
No, listen. I mean, this is Trump went Trump, right? I mean, that funny old expression, the tiger went tiger, the Siegfried and Roy unfortunate reference. We knew this was going to happen, folks. We talked about this in our year to go outlook when we did this and covered these kind of broader policy anticipations in December and in January. It's just that we got around to it now, but we knew it was going to happen. And the reason that these sell-offs, Pete, are justified, it's not just, Trump bullish and anti-Trump bearish. These are businesses whose model, their economic model, rely on things like the tax credits. They are not fundamentally, unfortunately for the clean energy folks from time to time, they are not fundamentally profitable without this kind of government assistance. So I think the sell-off is completely anticipated. Anybody that was in these things was not paying attention to what we've been saying about this sector since the election day. And so I got very little sympathy for you if you're getting hurt in these names right now.
Well, I got a little bit, but I tell you what, you really should have thought about it. If you were in these names, to Mark's point, I mean, this was just a matter of time. It wasn't hey, this is a shock. It's like, when is this going to happen? Right. And with Trump in office, I think you can understand that it's accelerated forward. All right, how about Verve Therapeutics? Now, this is a name that's really, really interesting. You've got Eli Lilly out there saying, you know what? We kind of like what we see out of this company. We're going to acquire this company out of Boston. We're going to pay about $1.3 billion when it's all said and done, Mark, which is a really nice number once again. And it's going to be all-time highs. It already hit all-time highs today. They're actually even talking about the idea of maybe getting up towards 13. There's all kinds of different tiers that they want to go through. How about this? 42 million shares traded in the first 30 minutes of the day. I mean, this thing is on absolute fire. They've got a really good, strong balance sheet, which I think is very important. They're about gene editing and all the rest of it. I go to two different things right now, though. The shorts, and we have our own guy, Jeff Gerbaz, talks about this all the time. They're at 22% short interest, Mark. Those guys are not feeling it because you know what? They're not only getting squeezed, but there is no way to exit this thing at this point in time. I mean, they're in trouble, and they are getting squeezed. But the other side of it, and I always go here, but I want to just hammer this home every time I see an acquisition or an IPO. Hey, guys, investment banking. Those guys are seeing these things come through. $1 billion here, $2 billion there, $4 billion there. I mean, that is why Goldman Sachs, Morgan Stanley, JP Morgan, Bank of America, Citigroup, you can go through the list, but that's why I continue to view the next set of earnings that we come out with the financials kicking them off. I will say investment banking had to have been good again.
Yeah, I don't disagree with that, Pete. I will say healthcare has been a little bit of a dark spot from a capital raising perspective. I had a conversation with a friend of mine that's the head of investment banking at one of the very large Wall Street shops, and raising capital has not been easy. He explained to me that we are still in something of a COVID hangover when it comes particularly to therapeutics. where we basically funded and took anything public that had anything to do with healthcare during the pandemic and even thereafter, and we're still coming out of the hangover, as he put it. What's relevant and what's the actionable item from that? M&A activity. Lilly, notwithstanding paying 1.3 billion plus for Verve, obviously thought this was a good purchase. They did not think they were overpaying for this name. I would agree, if the investment banking landscape was different and stronger, and we are seeing it start to come back. We are seeing that hangover recede, maybe having a couple of Bloody Marys, or however you get rid of a hangover in investment banking. But I think we will see continued M&A activity until the investment banking water gets warmer for the healthcare sector.
Yeah, absolutely. All right. How about this one? APPS. Now, for a lot of people, you'd say, well, it's obviously a tech company. You'd actually be right, but the name of the company throws you off just a little bit, especially on a day like today. Digital Turbine. Yeah. The first thing I think of, Mark, is I'm thinking, all right, well, wind turbines, right? I mean, we're going after these guys in the solar world. Why not go after the guys in the wind world? Well, they're not. It's a mobile software company. It's absolutely one of the best I have ever. It looks like a stock that actually has been taken over, Mark, but that's really not the case. The reason this stock is up more than 40%, last I looked, it was up 46%. The reason is this. There's not a number you can see in this earnings report that doesn't look fantastic. Revenue's up 6% year over year. EBITDA is up 66% year over year. Free cash flow, that's up big. Gross margins has gone from 46 to 48%. The revenue per device is up 40% in the US and 100% internationally. I mean, there's no way you can look at any spot and say, well, they were a little bit weak here. They were a little weak there. No, that's really not the case. Everything looks great. And a decent short interest in this one, call it 7 to 8%. They're hitting new 52-week highs today, over $7, 731, 52-week highs. This is an absolute unbelievable report, and that's why this stock is absolutely on fire this morning.
Yeah, listen, I like it. I think this thing could go even higher. I'm not recommending that you chase it on a day like this. If you like it, buy it on a pullback. You know our standard advice. Here's the bigger picture thing I took out of this, though, Pete. This is an ad tech company, right? Advertising technology. They provide tools for advertisers and marketing agencies to do better on mobile devices. And the type of report we got from Digital Turbine this morning tells me that, notwithstanding all of the naysayers that say, oh, in a declining economy, going into recession, stagflation, Trump's going to push us into recession, one of the first things that companies cut back on when they need to cut back on spending is advertising, right? That is tried and true. That's economics and stock market dynamics 101. So we look to the ad tech space, we look to the advertising space as an indicator, folks, of how the broader economy is doing, right? That's what I really get jazzed up about when I see Digital Turbine's report today. We're not seeing declines in ad spending, Pete. We're just not seeing it. So
Right.
What does that mean? Notwithstanding all the gloom and doom that you might hear on certain four-letter networks, it's not being borne out in the economy, which remains strong and resilient.
Unfortunately, a lot of these different financial outlets out there talk about if they live by the words, if it bleeds, it leads, right? And that's what they're looking for. And in some cases, it's not bleeding. They're trying to make it bleed more, though. They're cutting it open to see if they can get more blood out there. But in any case, yeah, I totally agree with you, Mark. How about T-Mobile? Now, this one's pretty interesting because SoftBank is out there saying, you know what? We've had a hell of a run in this particular wireless telecom world of T-Mobile and others, and the investments that they've got there. Well, it turns out that the CEO has gotten pretty aggressive about this. That's why, TMUS is under by about 4% right now. Maybe it's even a little bit more. But the reason is they are taking off chunks and chunks and chunks away from that area because they want to be where the real action is, which is AI and the investment in more and more and more AI. So the divesting of the one and investing in the other is becoming something very, very big for SoftBank, and it's pretty daggone interesting what's going on here. It's putting pressure on them. Now, it's not a negative about, that whole world of wireless telecoms and the rest, which is why I would say keep an eye on those names. Keep an eye on names, in that space, because they're not selling because they hate it. They're selling to raise money because they really like what they're seeing going on in AI and have to have more exposure there. So this is one where I'd look at T-Mobile and say, you know what? if it's for whatever reason gets hit too hard, that might be a name that you might want to actually pick up, because it's not for the negative of that name, it's for the positive of AI.
Yeah, there's no doubt. And I mean, look, again, you didn't need to be a rocket scientist. When SoftBank makes a $500 million commitment, that's $500 million, folks, to Project Stargate, which is part of President Trump's administration's Manhattan Project 2.0. You know, we wrote a research report about this, that we enjoyed giving out every single printed copy we had during 10X Wealth, Pete. That was fun. Autographing those alongside you guys with the It's Not an Option books. But we knew this, right? SoftBank was going to have to come up with the money to fund that Project Stargate commitment. They are going to fulfill that commitment. I guarantee you that. They're not going to fall short on that. And they're not seeing the growth. And are we really that surprised when you see a $5 billion private sale position of this size out of a name? You're going to see the name struggle. So this was another one where we kind of saw this on the horizon. It was just a question of when.
Yeah, absolutely. All right. Are we going to jump to some sports real quick? I know you enjoy it, man. We're going to get you in here. You're going to like this, because I am trying to mix sports with finance as much as I can, with, especially when you're around for this. So I'm going to start off with a little college football for you. And the reason I want to do that is college football is the NFL. It's just the pre-NFL. And why do I say that? When I give you some of the numbers I'm going to throw out to you in 1 second with NIL money, you're going to say, what? I mean, are you kidding? It's gotten ridiculous, Mark. And then free agency is the portal. At any moment, these guys, there's certain times a year they're supposed to be able to do it. That doesn't mean that they stick to that. As a matter of fact, if a guy's not in the portal, you're not supposed to be able to go after him with NIL money, but it happens anyway. So, all these things have a little bit of a bend to them. But what if I were to tell you this? So Arch Manning right now is the highest paid NIL person that there is in football player, obviously. $6.6 million at the University of Texas. That's what this kid's making. Carson Beck, $4.3 million at Miami. Jeremiah Smith is a wide receiver over at Ohio State. He's getting $4 million as a wide receiver. The rest are all quarterbacks. But there's a kid out there that's really, really interesting. He's making $3.7 million at South Carolina. Now, what makes him interesting is this. No one has put out what the name of the school was, but he was offered $8 million per year to leave South Carolina. He's not in the portal, but it's okay, apparently, that you go around the rules a little bit here. He's not in the portal, but he was offered $8 million if he would stay for the next 2 years. $8 million this year, $8 million next year. Then you can go into the draft, kid, and we'll see you later. Well, the kid is a very classy young man. His name is Lenoris Sellers. And I'll tell you, had a great year last year. He will have an even better year this year. He's 6'3", 240-pound quarterback. Kind of reminds you a little bit of a Josh Allen. He likes to run. He can run. He's as big as a tight end. He also can throw the ball very well, has a hell of a lot of touchdowns last year, not too many interceptions. And he, like I say, he can run the football as well. So he's much like a running back. He will be up for the Heisman. I'm not saying he's going to win it, because you know what? We're not there yet. But this kid's making $3.7 million, and he and his dad looked at each other and they go, well, why would I leave here? I signed up to play here at South Carolina. That's why I'm here. I did get NIL money, of course. They all do for the most part, these quarterbacks especially. But what a classy young man in my mind, because he's actually in it as a college guy, despite that they're basically the NFL, and he could be making twice as much. Now, a lot of people out there could say, well, that's pretty stupid and foolish and whatever. Let me tell you something. If he's as good, Mark, as we think he is right now in his first year of playing last year after a redshirt year, if he's as good as what he put out last year, or even better, most likely, this kid's not going to be worrying about the $4 or maybe total of $8 million that he would lose in this deal. Because when he gets into the NFL, he will be perfectly set up. And if he's not, he's got $3.7 million. It's something pretty nice to fall back on, right? But what do you think about this whole world of sports at the college level that has truly turned professional? Isn't it crazy?
Well, I mean, listen, certainly a very classy move on the part of this kid. And, as you know, from time to time, I get invited to the Heismans here in New York. I didn't go last year. I went the year before, brought my beautiful daughter with me. But if he's going to be in the running, I think I might need to start doing some negotiating to make sure that I have not only good seats, but not only seats, but good seats for this year's Heisman's, which is always an absolutely incredible experience.
Mhm.
And yet, look, I mean, at some point in time, there has to be some serenity now, right, coming to all of this, because, in the words of George Costanza's father, because, otherwise, as we've said many times when we talk about this on the show, Pete, it's just going to turn into he who has the deepest pockets will have the deepest bench. And I don't think that's good for college sports. And hey, Pete, let's talk a little bit about the NBA.
Right.
So Jalen Williams, holy cow, was that 40 points in one game against the Pacers? Was that a career record for him? It had to be.
It's got to be, just because they've not been to this level, especially. But he shot 3-pointers. He was 60% shooting from three. He was 56% in the field goal world. He scores 40 points, and he's playing with the guy who is the MVP of the league, right? I mean, so when you have all of that, and SGA is willing, that's the thing I like about this kid. He's like a Michael Jordan. He's like a Kobe. I'm not saying his game is there, because nobody is, in my opinion, but he plays basketball the right way. He plays as a team guy, and he really feeds this other gentleman, Williams. So that's what you're supposed to do, and that's why I think they took this next step. Now they've stumbled a little bit with Indiana, but let's be honest, the Pacers are pretty damn good, and Halliburton's pretty damn good, but now he's hurt. I think this series is most likely over, like most people probably would. If Halliburton is not healthy, it's going to be really, really rough for them, because he is, the oil in this whole thing that really gets them fired up and going, and the great crowds that Indiana has, just like the great crowds in Oklahoma. Now, the one thing is, these are small market teams, and where they live and all the rest of it, where they're playing these games. And that has hurt ratings a little bit. The NBA's ratings are awful. John and I talked about it yesterday, Mark. They're down 24% over the last couple of years. So it's really, really bad. And ESPN, I think, is going to be wondering why they gave the NBA $76 billion in ads. Right?
What do you think the solution is, right? I mean, if you were the head of the league and you're part of your responsibility is trying to figure out the viability and growth of the league as a business model, like what do we do? Like, better looking halftime cheerleaders? Like, what's the solution? I'm in favor of that, but I mean, I don't know if this is necessarily going to bring the ratings back.
Yeah, I think part of the problem, and I've said it a lot, Mark, is load management. Anybody who approves that, which they have, and Silver has, whether he wants to admit it or not, he's embraced it in a big way. He's an idiot for doing that, truly, because you can't have that happen. It's one thing at the very end of the season and you're the Minnesota Vikings and you've got 13 wins and you don't have to win this game, so you take your quarterback out. You don't want him to get hurt before the playoff. We all get that. But generally, in most other sports, everybody's playing just like every single game. And if you're alienating the fans, which they are when they do this, that's a real problem. And I think that's a huge problem. Now, that being said, I will say this for him. He did a great job on negotiations. He's got this new contract of $76 billion coming from ESPN. I point the finger at ESPN and go, you're a bunch of morons. And I like the CEO. I know the CEO, but he's an idiot. He really made a terrible decision to give them that sort of money, Mark. And especially, we all see the direction of what this is going as far as the ratings. It has been doing this since 1992.
Wow,
I mean, there are major problems going on, and it's a major issue. Now, it's not all the way to 92. I'd say 1998. It's at the trail of when Michael Jordan stepped away.
Yeah.
But nonetheless, the ratings have been dropping. We all know that. It's been an issue, and it's going to be an issue into the future. But I'll tell you what, when the MVP of the league, SGA, gets out there and he's sort of the second fiddle, but he's okay with it because he wants to win, that tells me a lot about his personality, being that Michael Jordan kind of guy who wants to win. I don't care how we win. I don't need to be the guy who shoots the last shot. If I get it, I'm going to do it. But I don't have to be that guy. If I'm triple teamed and I get it over to Williams and he makes it, fantastic. So I like that aspect of it. I think there's a lot of good young players. We also have a lot of foreign players in the NBA, which I only say that because they aren't as name recognized by a lot of fans out there. And that can be an issue. And I say this I had Timberwolves tickets probably for about a 20-year span. So since the day they started until I ended that whole thing. But, the NBA's got their own issues going on. And I think OKC now is just going to walk through it and win it.
I think you're absolutely right, and I hope that the NBA is able to figure it out. I am a basketball fan. Pete, as you may know, I was lucky when I had an office in LA. I had season tickets to the Lakers. It was in the Kobe days. I was 13 rows behind Jack Nicholson, set, mid-court. It was a fantastic, fantastic seats. I'm also a Knicks fan. Oh, man, that was quite a huge disappointment because New York City was absolutely on fire while they were still in the game. Well, Pete, thank you very much for giving me a little bit of airtime on sports today. It's always super, super fun to do the Rebels Edge with you. And in the meantime, folks, a little bit of shameless publicity. We have another live Market Rebellion event coming at you. That is absolutely correct. It is the Rebel Boot Camp, September 19th and 20th. That's going to be in Aventura, Florida. And this one's going to be a little bit different, Pete, as you know. Our loyal members of the Rebel Nation have asked us for more intensive education, more hands-on breakout sessions, one-on-ones with the experts, including you and John. And that's what we are delivering at the Rebel Boot Camp. Yeah, sure, there'll be networking and cocktails, and we'll have a VIP thing. But this is for people that are there to learn the tricks of the trade from the guys that have mastered it. And yeah, you know who they are. It's the Market Rebellion team. So producer JW, if you can, pop up the QR code and that little splash page for the Rebel Boot Camp. We would love, love, love to see you in person. Aventura, Florida, September 19 and 20. We even got our friends at the Aventura Hilton, Pete, which is walking distance across the street from where we're hosting the boot camp, to give us a really, really special Rebel discount on rooms. We got a room block there. So, folks, if you have not already picked up tickets, we've only got 120, and I think this team's already sold 25. They're going fast. We'd love to see you at the Rebel Boot Camp September 19th and 20th. Pete, that's it for us.
Awesome.